Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj. So the global setup obviously was the big disappointment, considering that we'd been talking about how our structure looks so oversold that you could expect a bounce back coming in. You know, that all went kaput when you saw Dow plunging the way it did.
Yeah, and frankly, I think that's the moot point, right? Maybe we are in oversold territories with the world markets doing what they're doing. Difficult to presume a bounce will come about soon.
Yeah, and like Darshan highlighted, there's no silver lining with regards to earnings also, with 32 Nifty 50 companies that reported numbers, just 4 of them that have managed to beat street expectations. So that's clearly not something that you will go by with regards to any sort of optimism. But aside from that, another key area to watch out for in terms of market internals is the derivative space and what's happening there. Agam Vakil, he's joining in right now to take us through the details. Agam, good morning.
Sure. Good morning, Devina. Well, we do know that there was a lot of weakness in the futures and options space yesterday, quite likely because of the fact that we did see the indices come off quite substantially. And so while the Nifty lost another 1.2%, there was another 4% increase in open interest towards shorts. The picture isn't any different for the Nifty banking futures, where the open interest has just, it's moved up around 3 times that of the Nifty, and we can see about 12% increase in open interest there. The weakness was also a little more pronounced there. The India VIX has advanced by around 9%. Now it's firmly above the mark of 16. That means there's a bit of a problem in terms of expectations of volatility over the next few weeks. As far as your open interest change is concerned, the traders took the opportunity to go long, or rather, pardon me, to sell the 10,900, 11,000 calls, which means that could turn out to be a little bit of a resistance on the top side. That actually is very evident in your open interest numbers as well, because we do have a lot of accumulation around the 11,000 call as well as the 11,000 put. But a lot of traders suspect that should we see the Nifty continue to sustain below that mark, there will be more unwinding in that particular put option. The put call ratio also came off to a relatively neutral level of around 1. But in terms of stocks, we're watching out for the likes of NBCC, Engineers India, Motherson Sumi, and Ujjivan Financial, all of them losing out, all of them seeing fresh shorts. And in terms of stocks which are seeing unwinding, CESC, Equitas Holding, and Bharti Infratel, we're seeing some amount of unwinding coming through. But on the whole, the complexion of the market not looking very well for now.
All right, Agam, thanks very much for that. So that is clearly something that's pretty evident across the board, whether it be the large caps or the mid caps. Mayuresh Joshi, fund manager at Angel Broking, he's joining us on the show this morning. Mayuresh, a very good morning to you. Run us through what is it exactly that you are going to be looking out for now. I mean, we've been talking about how there could be a possibility of a bounce back, but that just doesn't seem to come. For the equity market investor right now seems to be a very pivotal point as to whether or not to start making those fresh investments, considering we're 11% off the record highs.
Good morning, Devina. No, clearly I think equity markets are seeing a lot of pressure points at this point of time. So at least at this point of time, I think the global fears and pressures are playing out quite evidently on riskier assets, including equities. And again, I think to complement and supplement that, I think you've gone our own sweet issues. So we are grappling with slowdown fears of our own, whether we have a respite in terms of corporate earnings growth, because that is what every analyst on the street is very, very hopeful for, I think, and has been waiting for the past 2-3 years. But that has not really come through. So even if you look at these quarters' numbers, I think they are extremely weak in some pockets. I think some pockets like paints, for example, have probably held out. But I think generally, if you probably see across the universe, whether you're talking about autos, whether you talk about select banks, whether you talk about NBFCs, the consumption space at large, I think you are grappling with all those issues at hand. Having said that, I think the revival estimates and the probabilities that one puts through for corporate earnings growing and the expectations of private capex coming through over the next few quarters, that really hinges upon how the government probably acts upon, both in terms of improving sentiments going forward and what really happens in terms of the global setup as well. So I think all the conditions at this point of time are pointing out to a very, very weak setup for equities as a whole. It's been a very, very tough time for equity investors for the year and a half. But again, I think there is some element of hope. But again, whether that probably comes through in spite of what we are anticipating or expecting, I think if these trade wars still continue, which it looks in every probability would be, I think has a huge say in terms of even how the currencies react. And China has reacted in terms of the yuan devaluation. So I think if these currency wars go full-fledged, because every economy would like to protect its export to a certain extent and also its foreign imbalances, we probably are going to see some pain still continue. So I think the pain might still very well continue over the next few weeks and months.
Mahesh, a couple of stocks which cracked a lot yesterday. You spoke about financials. What do you make of the earnings and the resultant reaction in Equitas and Ujjivan? And do you reckon that there could be more downsides?
No, so the pain, Neeraj, good morning. I think the pain obviously is still continuing, because I think the overhang for the stock is obviously going to be listing in terms of their payments bank and what kind of a discount that probably comes through on that front. On the other front, I think when you talk about and try to analyze how the financials have probably been placed, I think the financials for Ujjivan seem to be quite reasonable in my opinion. So whether you talk about disbursements growth, whether you talk about how the advances have probably grown over the past few quarters, the asset quality pressures which have significantly come down on their balance sheet, the non-microfinance book, which is obviously improving quarter after quarter, which is almost 18% now at the end of this quarter. What probably happens in terms of their capital adequacy? I think capital adequacy for both Ujjivan and Equitas stay extremely strong. And again, I think the geographical diversification that these companies are trying to do, the brand setups that they've probably put through, I think a lot of capex was going through the last few quarters, but that has now started substantially playing out in terms of CASA improvements being seen on their balance sheet and return ratios remaining extremely strong. Equitas, I think the GNP has bumped up a tad bit quarter on quarter, but for Ujjivan, I think the numbers were pretty reasonable and pretty strong as well. But I think in this general fear of what probably comes through in terms of the issue and the supply of paper related to the bank and at what timeline does it happen, I think that probably creates a huge overhang onto these stocks, and also the need for diversification from microfinance, because I think the market is also clearly fearful in terms of any defaults probably happening on that front. The collection efficiency, again, if I may point out, has been extremely strong for both these entities. So valuations are very attractive. How you time it, I think, is going to be critical. I think maybe over the next few weeks, if they correct further, I think they'll become good entry points.
All right. Mayuresh, stay on with us. Lots more to talk to you about, but let's focus back onto what's been happening with regards to the currency. The yuan's drop below 7 per dollar, and the resultant escalation in trade tensions dealt a blow to the Indian rupee. The slowdown in the domestic growth and the sentiment surrounding Jammu and Kashmir did not help either. The rupee, in fact, clocked its biggest one-day fall in over 6 years yesterday. The currency closed at around 70.73 to the dollar. Will the pressure on the rupee continue? Let's ask Anand Bagri, domestic market head at RBL Bank. He's joining us on the phone line right now. Anand, thanks very much for taking out the time. What have you made out of...
Good morning.
Hi, good morning. What have you made out of the various moving parts and the impact on the currency right now? And do you expect that to continue to escalate? Because at this point in time, at least from a trade war standpoint, that there's no meeting ground.
Yeah. So I believe the trade war and the eventual currency wars, because China is continuing to devalue its currency, would put pressure on Indian rupee also. Plus the developments that have the geopolitical tensions which are also there, I believe this would keep on putting pressure on rupee. I think we are headed towards 71.50 to 72 levels over the next few months.
Do you think any support can come in for the currency as we approach, the RBI monetary policy? And do you feel that there could be some internal support for the currency?
So there could be some, I think the trajectory is upwards only. There could be some correction, maybe a 20-25 paise correction here and there, but I think the trajectory is towards 71.50 only.
Okay. What is your best and worst case for the currency at this point, keeping in mind all of what has been happening?
So I believe possibly 70 would act as the base for currencies now, for INR now, and I believe it's headed towards the 71 to 71.50 levels over the next few months. In fact, the move has been very swift, very fast, and I think that would keep on exerting pressure.
Do you? What would the real be for the currency right now?
I believe it should be around 72. I'm not too sure about the actual number, but I believe it should be around 72.
All right, so you still believe that in terms of the read, we are fairly
We are
priced?
headed high. Yeah.
All right, Anand, thanks very much for joining and really appreciate quick comments there from Anand Bagri. Still
you so much, Ira.
anticipating some weakness there, expected to propel the currency lower to levels of about 71, 71.5.
Okay, that's of course on the currency. Let's go across and focus full tilt towards the equity markets. Before we get in our technical experts, go across to our research team to try and figure out the key stocks that one should monitor. A couple of large numbers that will come out as well. So Mishika, Agam and Shefali joining to talk about all of those. Good morning to all of you. Mishika, let's start with the stocks in news first.
Yes, I'll take you through the key earnings. Let's first look at Berger Paints. Their numbers were higher than estimates and they had a strong double-digit volume growth. Now the margin boost was on account of lower raw material costs, especially the benign crude prices. Gross margins expanded by 140 basis points on account of price hikes. Now HSBC has raised target price to 380 rupees from 360 rupees post the strong Q1 earnings. Next we have Entertainment Network. The results were in line with estimates. Lower profits were due to higher depreciation and finance costs. The management indicates that advertising spends were impacted due to a sluggish economy. Core radio revenues grew only by 1%, while solutions business grew by 42%. Then we have Dilip Bilkon. Their results missed estimates this time. Lower sales were due to the delay in receiving appointed dates for the HAM projects. Roads and bridges segments dent revenue performance, while mining was strong. Net profit was down 51% due to high depreciation and finance costs. The guidance of sales growth is of 15 to 20% year-on-year with stable margins, and the guidance for net debt to equity is of less than 0.8 times by the end of FY20. Next on the list is SRF. The results were in line with estimates. Revenue growth was led by chemicals and packaging business, while textiles was sluggish. Other income and tax reveals boosted the profits. The management says that the chemicals business was affected by the Dahej plant shutdown. Technical textiles business was impacted negatively due to lower offtake by customers. The management has announced a capex of 424 crores for development of PTFE, which is basically a synthetic fluoropolymer. Indian Hotels, inline numbers, revenues are up 4%, net profit drops 63% on the back of higher finance and depreciation costs. Domestic business grew by 1%, while international business grew by 8%. The EBITDA is up 57% and margins stand at 17% versus 11% on adoption of the IND accounting standard 116. Adjusted, the EBITDA has grown 16%, while margins stand at 12.6%. The management has said that June and July has seen a very good pickup. Then we have Mangalam Cement. Revenues are up 31%. Net profits at 33 crores versus a net loss of 15 crores. Higher other income was boosted by profits, and cost control boosted margins. Healthy volume growth was led by ramping up of the Aligarh unit. The EBITDA has gone up 14 times. Margins stand at 20% versus 2%. Raw material is as a percentage of sales stands at 10% versus 18%.
Thanks, Mishika, for that. On to some result previews and what's anticipated from the big boy today, Agam.
Right. Well, Titan Company, we already know they're expecting a very subdued quarter as indicated by the quarterly update. Very quickly, as far as the headline numbers go, net sales likely to see an 18% growth. EBITDA margins expected to remain flat at around 11.5% and profits likely to rise 19%. The company has already mentioned that they will likely see around 13% growth for jewelry sales. Watches likely to continue to that double-digit momentum at 11.5%. The gross margins expected to come down just a tad bit, but on the whole, it's going to be a stable quarter for Titan.
Okay, and what about the financial name? In news for all the wrong reasons, what's the quarter expected to do?
Well, a subdued quarter is expected this time around from them, and we're expecting disbursements to pick up slightly, but not much. We are factoring in a disbursements figure of about 8,000 crores, but overall PAT figure is expected to go down by about 5% on a YY basis. overall AUM's growth as well is expected to decline sequentially by about 3% and other than that, asset quality would be a key monitorable to look forward to. The Radius deal that happened towards the mid of June, that will aid their overall numbers to a certain extent, but how the overall asset quality pans out, if there are higher slippages, that will need to be watched out for.
Okay, Shefali, thanks. We'll watch out for that as well. So 2 or 3 names that you should definitely consider from a results perspective and a couple of earnings. Mayuresh, one quick word. A couple of small cement companies that have come out with numbers last 2 days, JK Cement, Mangalam Cement. Do you like either of them?
No, so it looks very interesting as a space, Neeraj. So yes, I think something like a JK Cement, for example, I think there might be improvements in terms of synergies that they can do with volume push through, expectations of benign costs playing out because coking coal prices have probably remained subdued and the expectations in terms of an improvement on a bit upper turn and an automatic leverage on their balance sheet. But again, I think what we really like and hold are specific names like Ramco Cement, for example, where our own belief again is that the capacity expansion that Ramco is doing, specifically in Northeast India, I think in Odisha and West Bengal, I think the clinker and grinding units that they're probably putting through, along with the grinding unit and the 27 megawatt plant in Andhra Pradesh, I think that should probably prop up volume significantly because I think their overall capacity goes up to almost 20 MTPA. Again, I think in terms of input costs, I think as I said, for the sector as a whole, that should probably remain benign. The next quarter probably remains a little bit soft because of monsoons, but the expectations of utilization levels picking up, the realizations picking up clearly create leverage on their balance sheet. So yes, I think we remain selective on this sector, but stocks like an Ultratech in the large cap names, Ramco Cements within the mid cap names is something that we continue to like and hold in our portfolios.
Okay. That is for some of these cement names at this point. Let's also bring in our technical experts to talk about how you could trade the index, if at all, and what are the stocks to watch out for. Amit Harchikar, Director at Index Genius Investment Advisors, is joining us on the show. Along with him, Gaurav Bissa of LKB Securities is also here. Gentlemen, good morning to both of you. Let's start off with you, Gaurav. First off, on the index.
The index is again in a spiral. It's like a rerun of a scary movie being telecasted, and we have a discussion. It goes up by 150 points. Again, we are back to ground zero. So the view remains the same as long as we're trading above the levels of 10,800 spot levels. Things can be a little fine. I'm talking about the closing basis. Then if we can head towards 11,100 and maybe a little above those levels. But if we were to close above levels of below the levels of 10,800, then the roads will open for further downfall towards 10,650, 10,600. For me, if somebody wants to trade, wait for at least half an hour. If for half an hour we're trading about 10,800, probably a 10,900 call option or 11,000 call option for that matter can be bought. If not, then one needs to be on the short side only.
What about you, Amit?
Last week we had discussed about the magic of the 3 black crows pattern. This week it turns out to be the second week after that pattern. We believe generally this pattern lasts for almost 3 weeks before the selling momentum cools down. Plus, yesterday we had a breach below 100 weekly moving average, which turns out to be a very long-term support. That also confirms with an extended downtrend in the near term. Adding to it, if you see from a risk-off perspective, the Nifty to Gold Bees ratio, which has currently breached the support of 3.5, it is now heading towards 2.5. If you see the entire structure in last 1 year, it had a head and shoulder top pattern, and we are now expecting that ratio to dip toward by at least 25%. The implication is more funds would go to risk of asset class, and more fund outflows is likely to come from equity class. So overall view for the market clearly suggests in the short term we are heading towards 10,350 to 400. If anyone wants to create fresh short positions, a very short-term stop loss on a closing basis would be at around 11,100. And as I said, there is more risk on the downside looking at the moves what we are seeing on the global front. So I think you will see a lot of unwinding, because if you see from the levels of 11,400, a lot of longs were added on the market on expectation that 11,000 will not be bridged, and we are now convincingly closed below 11,000. So we think next round of selling we are expecting in this market, so one needs to remain on the short side.
Okay, let's talk about stocks then. Amit, keeping it with you, what would your calls be?
I'm repeating the same call of IndianOpen Bank which we had given last week. Now here the reasoning is we are expecting a descending triangle breakdown in IndianOpen Bank. That is projecting us a target of at least 1250 in the coming weeks. We don't know the exact time frames. That's why we are suggesting a strategy where you need to buy a 1340 put option of IndianOpen Bank, which is trading around 30 to 32 rupees. You buy it at these levels, keep a stop loss of 8 rupees on a closing basis. We are expecting a target of 90. Our second pick would be going short on ITC futures. Now here the rationale is ITC forms part of an index of FMCG plus. If you see the entire ITC's 3 years of pricing structure, it has also given a breakdown from a descending triangle. So we are expecting overall target of ITC towards 210, 220. However, in the short term basis, we are expecting a target of 245. Stop loss what we would recommend would be a 268 on a closing basis.
Okay.
Amit, Gaurav, your stock ideas first before I have a couple of other questions. But what is it that you're recommending today?
I would recommend the first name would be on Reliance Industries. That you've seen a strong correction already happening. 1100 put option commands a good concentration. This is also support level as far as Ichimoku studies are concerned. The bullish Kumo support comes around levels of 1100, 1105, and it has also formed a bullish harmonic pattern because a grab pattern. So there's a chance that we may see a bounce back sort of coming in. Since market is going to open on a weaker note, I would play for a decline. We will get the stock on declines only. Keep a support of 1110 around those levels on the upside. 1180, even 1200 would become quite possible. Gradually, it will take some time, but 30-40 points a jump cannot be ruled out. Second recommendation would be buy on Havels. Strong correction has been seen. Bullish AB equals CD pattern near the strong support of 650 620. That can be used as a stop loss. And on the upside, 655, 660 is what I would be playing for.
Okay. Just keep in mind, and we'll talk about the flashes on the screen as well, but just a point that I want to make. You got to put this into perspective. The Nifty is down 1,200 points from the highs of 12,000 odd. The world markets haven't done that. They're doing that now. And keep in mind, because of all that's happening, there are a couple of things that are probably working, 2 or 3 things that are working. One, crude prices have come off and come off quite materially, so that impacts the macro for India. So keep that at the back of your mind. 2, the government, in all earnestness, yesterday in the press meet as well, the finance minister said that they are going to make sure that they listen out or hear out or give a ear to the FPI community as well. That's that big overhang for the equity markets, Indian equity markets. And if that goes away, that is also a net positive for India. So, this couple of things that you got to keep in mind, and the RBI policy tomorrow might well do a favor too. So 2 or 3 things that you got to keep in mind. We are maybe oversold, maybe a bounce. Just brace yourself for all of that as well. The SGX Nifty 2 is now down only 0.5%. It's quite unlike what the rest of the world is doing. Let's wait and watch what happens during the course of the day. The last 4 days, we've started off way lower, and from the lows of the day, we've actually ended slightly higher. So just keep that at the back of your mind. I'm not a technical expert, really. Our experts are best placed to talk about that. But just a couple of things that you got to monitor. Just one quick question before we move on to the news at hand. And Amit, that's on Yes Bank. 8% crackdown yesterday. Can it go down further?
Absolutely. I think it has breached already the long-term multi-year support. We are expecting a target of around 62 to 65 in the near term. So strategy here, again, it would be a good shorting candidate. Stop loss on a short-term closing basis would be at around 95.
Okay. Some news flow on your screen is coming on from Bloomberg. The co-founder, Mr. Gangwal, is saying that he'll not vote to change the Articles of Association under the current terms, because I presume Gangwal has said that this move is based on serious unresolved issues, and the change would actually give Bhatia, the co-promoter, extra powers. So that is the latest in the spat between the 2 promoters, co-founders at Interglobe Aviation. Certainly doesn't seem like that too is going away in a bit of a hurry. Incidentally, Jet Airways the last couple of days, because of that extension and maybe some suitors, etc., has done well. Can't say the same for the rest of the other 2 airline stocks. Mayuresh, amidst all this turmoil across, if you have an existing investment into a SpiceJet or an Interglobe Aviation in particular, would you get out of it, or are you comfortable?
No, again, I think it's a perspective, Neeraj, and over the next couple of years, I think the 2 key variables, obviously, that move the earnings for these stocks is the crude movement and how the rupee moves against the dollar, because I think a lot of earnings are translated in dollar terms. So if one really assumes the scenario that we are probably looking at and crude staying in this tight range, or even moving lower, I think that probably abets a lot in terms of the earnings profile for these companies. At the same time, I think if the rupee depreciates further against the dollar, that does offset a part of the gains that come through from the crude aspect. Having said that, I think the slots that Jet Airways has probably vacated, the kind of expectations are clearly getting laid out in terms of numbers. So if you probably looked at the available seat kilometers, if you probably look at the new aircraft that are probably getting procured, and again, I think if you're probably looking at the occupancy rates at this point of time, I think the yield movement might not be that significant, but the cost optimization will definitely say have a bearing in terms of the yields actually stabilizing and gradually improving going forward. So yes, I think if somebody has positions in existing airline stock, they should very well continue their positions.
Okay, 30 seconds left to go for market pre-open. Gentlemen, stay on with us. We'll come back and get your thoughts on a few other stocks that will remain in focus. Two numbers that come out today, Titan and Indiabulls Housing Finance, talk about that as well. But that's what Asia is doing at this point. So it's a sea of red, 2% plus for each of those markets there. So Japan, China, Hong Kong, everything is down under. SGX Nifty though, probably down just another 0.5%. Also probably due to the fact that we've already corrected so much in the recent past. 0.5% given up on the Nifty 50 right now at pre-open, almost 1%. 10,761. Remember, the bastion still stays at about 10,600. So if that is still holding on, we may be able to pull through, but can't really tell with such volatile times. Individually, stocks to watch out for and how we are stacked up in pre-open. So if financials once again looking slightly weak on the index, and Yes Bank is down 10%. Again, we'll wait it out for a few more minutes till these prices stabilize. But for now, even Bajaj Auto is showing you an 8% cut. Vedanta is showing you a 4% cut. ICICI Bank is at 390, so the stock's back down under 400, despite having a really strong set of numbers and being touted as one of the more favored private sector banks in the recent past. So that's probably back at attractive levels. Eicher Motors, Maruti Suzuki, Ultratech Cement, Bharti Airtel are some of the bigger losers in trade. Reliance Industries, that's up about 0.5% at 1150. Infosys 0.5%, and Bharti Infratel that holds out about 0.25%. So handful of just 5 stocks on the Nifty 50 that have seen a pre-open tick of green. On the currency, there's not much of a move. I think it's just about flat at 70.74.
Yeah, well, Gati continues to grind lower. Something's gone wrong here. It was down 20% yesterday, down another 10% on the pre-open sessions. Let's wait and watch if that corrects. MRPL after that slam dunk yesterday likely to start off lower, so do watch out for that one as well. What about companies that did well? Berger Paints should come up on your screen. The quarter was pretty decent. Let's wait and watch if that is reacting positively in the session today. Well, just about holding out, so nothing too dramatic, but maybe it could do well going ahead. So that's one thing that you got to monitor. The SRF, the numbers or the revenues were largely in line with estimates, so let's wait and watch if that one stays positive in the day today. Indian Hotels, adjusted EBITDA was also in line with estimates, so let's wait and watch what happens. And two names, PNB Gills and Mangalam Cement, wherein both of them have turned to a profit from a loss in the previous quarter. Let's see if those stocks were to react positively at all to those numbers. Mangalam Cement in particular, cement companies by and large haven't had a bad quarter this time around. Viresh was saying that it's an interesting pocket. Do watch out for Mangalam Cement as well. The other set of names, by the way, the currency should come up on your screen, 7.82. Certainly weakening, not in the same vein as what happened yesterday, but yesterday was a bit of a black swan event reaction kind of a day. 7.72 or 7. Okay, so not big reaction thus far. Let's wait and watch if indeed the world currencies play spoil sport, then we may happen. The bond yields, again, ahead of the policy, I don't know how much of a big reaction we could expect here. 6.36. Anyways, yields across the world are going lower. No reason why Indian yields should spike any further. Crude prices falling could also aid the sentiment there. So there are 3 or 4 names that you got to monitor in the session today. Gaurav, besides bullish on Reliance Industries, is he bullish from a tactical perspective on the oil marketing companies at all? Gaurav, crude price fall typically gets equated with some gains. An opening trade, we may well have BP, HP, IOC doing okay. Is there a sustainable trade here, or you would let it pass?
If you talk about the trend reversal sort of, then I don't think it's going to aid for a longer term trend. But yes, if you look at maybe for a day or two, then there's a possibility that we may see some more upside coming in. But I would not be playing for a very large targets. They have given some breakdowns for HPCL 265 is a very crucial level. We have seen that it has been acting as an immediate hurdle, and once it closes above 265, then probably higher targets will become quite possible. But from here, 3-4% up move in whether it's BPCL or HPCL cannot be ruled out. But I would not play for a very large uptrend.
Okay. The other one, obviously, that we're looking at is some of these gold finance companies, Muthoot and Manappuram. Considering how gold prices now at record highs, I think 37,000 on MCX gold. Mayuresh, what would you do? Muthoot, Manappuram?
So we continue holding on to our positions here. They've been a clear disclosure and disclaimer. I think the business model, obviously, I think separates them from the other NBFCs across time buckets. The second element, as you rightly pointed out, I think gold prices are moving higher. But again, I think the model itself is quite resilient enough. I think the LTV values that they probably subscribe or ascribe to gold prices has a margin of safety and a cushion for these companies as they lend. And again, I think the duration of their loans are extremely critical. Third, I think the asset liability mismatches probably are very minimal for these companies at large. And though I think one of the companies did face issues in the recent past, my own sense is that they've probably got a very solid model in this front. But again, I think they're also diversifying. So I think the non-gold AUM is also seeing some amount of pickup, and that also provides some amount of respite in terms of the overall business dynamics. So ROAs remain extremely strong for this business as a whole. And again, I think in terms of their earnings profile, I think very strong numbers can probably still get expected over the next few quarters. So I think we remain very optimistic on this space. A clear disclaimer, we own this stock in our funds.
Okay. Would you continue to nibble into IT as safer haven investments right now, Mayuresh?
So continue to hold on to specific positions, Divina, within the large cap names. So I think Infosys is one holding that we continue to hold within the top tier names. I think what IT has done in the quarter gone by, assuming all the headwinds that it faced from currency in terms of visa costs, in terms of wage hikes, I think they were still able to tide through, and the kind of management commentaries that have probably come through, both in terms of constant currency revenue guidance either being maintained. For Infosys cases, I think they've actually upped the revenue guidance, and again, the EBIT margins probably getting maintained. I think the digital revenues, and to a certain extent, the kind of on-site offshore mix that they probably got, and the expectations in terms of execution improving, being reflected through utilization levels, though I think attrition levels for a few companies still remain extremely high. I think all these factors probably play out very positively. Now, the only caveat here is discretionary spending patterns in lieu of global slowdown, specifically in terms of what you've probably seen the North American markets or even the European markets in terms of the Brexit scare. I think that can have a bearing in terms of how BFSI probably pans out. But with liquidity conditions probably easing out in global markets, with central bankers jumping in, I think the second half should have some respite on this front as well, whether it is BFSI, retail or manufacturing. And again, order books are quite sufficient. So yes, I think it also becomes a safeguard in volatile times. So I think holding on to quality names probably makes sense. Infosys is a holding that we've got in our funds.
Okay, the other pocket which is volatile but falling for the last few days is the commodity pack. Now today, the top 5 losers on the Nifty in the pre-open session are all Nifty metal names. Hindalco, Tata Steel, JSW Steel, Coal India, Vedanta. Coal India is in that index. But even if you discount that as not being a pure play metal name, the other 4 are the top 4 losers on the index today, which is, well, quite interesting. The other interesting bit is as the pre-open rate settled down, the Nifty is down only 47 points, just about 0.5%. Compare that or contrast that to the rest of the Asian screen and you will see the stark difference. Rest of Asia down 2%, Nifty, well, a lot more sanguine. So let's wait and watch what happens here. But Amit, you've been largely bearish and your calls have been right on that front. If you are negative on the metal space, would you continue to remain negative? Would you be comfortable taking a fresh short trade on any of the top 4 or 5 index metal companies?
See, we have a very positive view on Vedanta because we have a contra view on Brent crude prices. We are expecting Brent crude to head towards $75, and since Vedanta also has keen into it, we are expecting Vedanta to move towards 185-190 zone. Other stocks, I think they would be more of a market performer, but from here on, the risk reward ratio is not that favorable for opening short positions, whether in Tata Steel or JSW Steel. I think we are now focusing on the stocks like Infosys, TCS, where a lot of long build-up is there and a lot of money has moved from these high beta stocks to defensives. So we are expecting that that is the area where the selling is yet to begin. So I think more risk reward ratio is favorable for opening short positions in Infosys and TCS from a positional perspective of 1 to 2 months.
Okay, well, Vedanta is slightly lower than that comfort zone or that zone of support that Amit had spoken about last week. Remember, 139 now. This is a fresh 52-week low for this one. Stocks tend to do that. Let's see if there is a bounce here. Gaurav, just one quick question. When you cited Reliance Industries, you mentioned that if indeed the markets don't start off very low, then there might be a possibility of maybe an intraday bounce, if I heard you correctly, and Reliance might be a part play out here as well. Are you playing for that bounce on the index now? 47 points lower, it's not dramatically lower. Is there a Nifty trade? For a lot of viewers who are tuned in right now would want to know if they should trade the Nifty. Would you do that?
When the markets open, it's going to be quite volatile. We are opening down with only 50 points, but that does not mean that we might not go towards 100 or 120 points down. The same was the case in last 2 days. We did not open with a huge gap, but then gradually we tried to mimic the kind of move that were visible in the Asian markets. So I would give it some more time. It's all about stability, not just the amount of points the Nifty is up or down. So if we are seeing stability at the current levels, then I would buy at the current levels. If we see stability after 15-20 minutes or half an hour, if we see stability forming around, let's say, a little bit lower levels at around 10,780, 10,800, then I will buy at those levels. But if it trades consistently below those levels, then it means that it can see some more pressure on intraday basis. Also, we can see more slippages coming around. But I would not buy on the open.
Okay, got that. Gentlemen, stay on with us. We're just minutes away from market open, and we'll tell you all that you need to know to stay ahead and trade today. Credit Suisse upgrades India from a market weight to small overweight. The brokerage cites 4 reasons: improved relative valuations, high real interest rates, negative correlation to the global bond yields, and low sensitivity to dollar renminbi.
Exporters in focus as rupee sees its biggest one-day fall in over 6 years. The reason, as we know, is a mix of both local and global cues.
Berger Paints beats estimates while ENIL, SRF and Indian Hotels meet expectations in the first quarter.
2 nifty companies, Titan and Indiabulls Housing Finance, will report their June quarter numbers today.
Lastly, world's largest solar EPC contractor Sterling and Wilson Solar's IPO opens for subscription today.
Well, let's wait and watch what happens there. Mayuresh, just very quickly before we thank you, would you recommend a subscribe to Sterling and Wilson?
I didn't have a look at that, but I think we continue holding on to a position in Tata Power because I think the renewables business thereof, I think is quite decent. What you're probably expected to also assume and see is that the favorable verdict that has probably come through, I think, ensures that the under recoveries in terms of the Mundra plant start coming down. I think coking coal prices have come down, so I think the profits from the coal JVs might just remain subdued for some time to come. But I think the overall dynamics from an earnings perspective and an ROE perspective probably changes because of the initiatives that they've probably taken, both in terms of renewables and non-renewables, which also should improve because of the Mundra recoveries probably improving. So I think had not had a look at the upcoming IPO. Tata Power is something that we continue to hold in our portfolios.
Okay, Mayuresh, quickly, ICICI Bank, now that it is sub 400, is it looking like it's slightly more attractive at these levels?
So I mean, if one really puts up the valuation stack, Devina, I think it probably still looks at an average mean or a median level over the past few years. But again, I think the outperformance that it has probably shown in this quarter's numbers, I think it's standing out within the top tier names as well. So I think the expectation largely is that earnings growth should continue for this bank. I think the disbursement growth, though I think should slow down a tad bit because of what you're probably seeing for the broader economy. I think most of the parameters are holding up related to asset quality in terms of expectations of disbursement growth, what you're probably seeing in terms of the provisioning that they've probably done. And that should reflect very, very clearly and very, very positively on their ROAs and ROEs. So yes, I think maintain a positive view on this one. And again, a clear disclaimer, we hold this at our funds.
Okay, Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. while ICICI banks certainly have taken the chin the last few days. Let's see if today there's a bit of a bounce that comes in. At the broader end of the spectrum, stocks like SRF seem to be doing okay, 2650, 2.5% on the back of what seemed to be a quarter which was in line with estimates. Let's wait and watch. If that continues to react positively, Motilal Oswal might have a bit of a green tick. Don't quite know why BG Energy is up about 10%. And then the set of stocks which continue to fall will remain the same. The likes of Coffee Day, Sickle, etc. and JK Tyre 2 might be correcting in trade. But if you had to bet on one key stock for trade today, what is that? Let's ask our experts that before the market opens. Gaurav Bissa, to you first. Your top call for the day today.
For me, that would be Reliance. I expect some amount of stability coming at lower levels, and it can be a decent buy, not just for today, but probably for next few days also. One can buy 1105 is acting as a very strong support area.
Amit, what about you?
I would short Larsen & Toubro for a target of 1290. BSE Capital Goods Index has broken 5-year support line, so we are expecting 15% slide into it, and L&T should lead that fall.
Okay, a short call on an index stock, a long call on an index stock. That's the view from our experts for the morning. Amit Harchekar, Gaurav Bissa, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time this morning, and have a profitable trading day ahead. Here's how the market's slated to start off. We'll start off about 0.5%. Let's see if we succumb to some more selling immediately, or do we weather the storm better than the rest of the Asian screen. 0.5%, actually not even 0.5%, 1/3% for the Nifty, the Sensex, the Nifty Bank. Each of these has corrected a lot lesser than what the rest of the Asian screen is doing, but let's wait and watch. Typically, the last few days, the markets have started off lower and then closed higher. Let's see if today is an encore too. Just about 48 points for the Nifty Bank, and that's interesting. 27 actually for the Nifty Bank, about 64 for the Sensex, and 18 points for the Nifty 50. I must say, this is a flat start. This is not a start in the red. The Nifty Bank, in fact, breaking into the green as well for an intermediate moment. So it's pretty heartening really to see India weather the storm slightly better. Maybe we've done a bit of a correction already. The mid caps and small caps should come up on your screen. And again, a very flat start, hardly any fall for the mid cap or the small cap space as well. So it's not looking all that ominous right now. Let's wait and watch if that changes. The heat map, let's see if there is more green than red on the screen, or am I being too ambitious? No, it's even Stevens, but again, is much better considering what the Dow did yesterday or what the Asian screen was doing this morning. I doubt most people anticipated this, and let's see if this continues or no. The top loser is Z, which is down only 1%. Hindalco 0.5%, Titan 0.5%, Reliance 0.5%, HDFC Bank 0.5%. And mind you, now the green is overtaking the screen, and metals are not the top losers, save for a Hindalco and a Tata Steel. The screen is dominated by Reliance, HDFC, Kotak Bank, etc. So those are the stocks that are pulling the index down. Otherwise, things are looking okay. Tech Mahindra, Eicher Motors, Bajaj Finance are all in the green, about 1%, 1.5%. Axis Bank about 1% higher. Indiabulls Housing Finance 1% higher. Bajaj Finserv about 1% higher. This is not a bad start by any stretch of imagination. The indices are in the green. If you can just look at the Nifty and the Sensex, this is not a start that a lot of people would have anticipated. Let's wait and watch if this lasts. Couple of pockets that I want to highlight before I hand it over to Devina, because very intrigued to know what the broader market is doing. But just these couple of pockets, companies that have corrected bit, companies that have come out with results. So strong results are getting rewarded today. Torrent Power about 1.5%. Mangalam Cement is up 9% into a profit from a loss number, and in the green. PNB Gill similar performance, profit from a loss, but it's a different set of dynamics, and therefore the reward is not so strong, but in the green nevertheless. Companies that got whacked out of shape yesterday, let's see what they are doing. Equitas bounces back a little bit. Gati though continues to fall about 6%, and NBCC is up about a couple of percentage points as well. But Devina, 0.5% for the Nifty Bank, that's a remarkable bounce back. What is the broader end of the spectrum doing?
It's not all that bad actually. So you've actually got the broader markets at an even keel with regards to the advances and the declines. So Nifty Mid Cap 100 is actually outdoing what the Nifty 50 is doing, up by almost 0.6%. So a decent enough bounce in today's early morning session. SRF is the other one on earnings, which has been rewarded, so about 6.8% higher. Indian Hotels is the other one that's doing well in today's session. Jet Airways continues to move higher after yesterday's 4% move. The stock's up about 3.33% today as well. You've got the likes of an HCL Info, a smaller name there, but doing okay. Future Consumer, 2.5% higher. Quest Corp, 1% Beverages, 2.5% higher. Indiabulls Real Estate, Indiabulls Ventures, both doing well. Den Networks is doing okay. Then you got Tata Global Beverages 1.5% higher. Sadbhav Engineering are some of the other names that are doing well in today's early morning trade. Losers then, Gati continues to lose. We just highlighted that. Coffee Day is down now, lower circuit. 7-day tally is down 56%. Lakshmi Vilas Bank continues to reel under pressure. Last 7 days has lost 20%. You've got the likes of Bharat Ford, JK Tyres. JK Tyres after yesterday's big slump is down yet again in today's session. And then you've got National Fertilizers, Future Retail, MTNL, SL Propack, some of the other smaller names which are looking weak. And now we've actually got a positive advance decline ratio. So that's not bad at all. But that's what you've got in terms of the market mood at open this morning. But let's bring in Tahir Badshah, Chief Investment Officer for Equities at Invesco Mutual Fund. He's joining us right now on the show. Tahir, thanks very much for taking out the time. Good to get you on a day like this. Obviously, the anticipation was for a slightly more negative start, but considering the kind of sell-off that we've already been, witnessed so far, where we've been off 11% from the highs, at a time where the global markets were actually moving higher. So the last 6 days have been bad for US equities, but they've given up about 5.5, 6 odd percent, but we've given up about 11%. So in light of that, do you believe that this selling has been overdone now and there could be a possibility of a turnaround from here, or the pain can still continue?
Well, I think the market clearly in the very short term has kind of overdone it because of obviously quite a number of factors which we are aware of. But we've underperformed a great deal, especially with respect to many of the other global markets, emerging markets as well. We are negative year to date, whereas many of the other markets are positive 10% plus in dollar terms. So I think obviously we've done a lot more in the very short term, and therefore from very beaten down levels, I don't rule out a possibility that there could be a pullback.
Mm-hmm. Okay. But what do you think you can attribute such a pullback to? Is it just going to be the fact that we've been so heavily oversold that could be a technical trigger to pull the markets higher? Because other fundamentals are clearly not supporting.
So you're right, actually, that we don't really have everything on the fundamentals which is going our way, particularly from a growth perspective, as we know that we have kind of faltered quite a lot, and the growth challenges has got a little deeper in the recent past. It has kind of disappointed us as well in terms of our own estimates, and we have pushed back our growth estimates further into probably the beginning of next year as such, from the second half of this year earlier. So clearly from a growth perspective there is a disappointment, but I think there are a few other macro factors which are still in our favor, and if you look at everything from interest rates to inflation to commodity prices to oil to up until recently even the currency for that matter was still pretty okay and reasonably favorable for us. So it gives us a chance as an economy to kind of walk out of trouble, especially in a situation where we currently don't have any policy support in favor of the economy. So I think and last but not the least, of course, in the last couple of weeks we've seen very good developments on the monsoon. We've almost brought down our deficit from about 25% to less than 5%. So I think that's good going there. So we have a few things to cheer about. I mean, it's not entirely gloom, but yes, I mean, from a growth perspective, we don't really have a choice but to postpone our growth assumptions.
The other aspect, Tahir, that would like your view on is, so far in this uncertain environment, even from a mutual fund industry point of view, there has been that shift in terms of investing, or the polarization on the index heavyweights. So top 10 heavyweighted stocks, we've seen much of the mutual fund industry pouring in the money into. Do you think that is somewhat reaching its peak?
Well, I would think so. I mean, at one level, if you go to see, the broader market is clearly offering a lot more value now. And when I refer to the broader market, it just doesn't end at mid and small caps. It is many of the large caps as well, which are kind of, so barring a few of the top large caps, a handful of the large caps, quite a number of the large caps, other large caps have also corrected and have started to offer value. So I think clearly from that perspective, maybe that very risk-averse trade at one level has been a little overdone as of now, and we think we are at the other extreme of the market where I mean, compared to what we had seen in 2017-18, where the broader market was really doing very well, whereas not as much in the case of the large caps. So I think from that perspective, we feel that we are at the other end of the pendulum, and things typically do mean revert.
Good morning, Neeraj here. I'm just wondering, because you look at this global landscape very closely too, because of the nature of the turn of events that has happened between US and China, if there is prolonged pain there, even if we have oversold, how high is the probability that we may correct further from where we are?
Well, I think it's always hard to call on some of the global developments, particularly with respect to US and China. It's it's absolutely all bets are off in terms of who can be able to call what's going to happen out there. But we have to take it as it comes, and we have to kind of look at our valuations and where we are beyond a particular point. I think there is something called intrinsic value of businesses which will hold up. I can only tell you this, that the way we are approaching it is that, look, can we look at a scenario where we postpone our growth assumptions for a while, not just for this year, maybe some part of next year as well. And if that were to be the case, then where do values lie, where do valuations lie? And if there's anything that makes sense from that perspective, we are happy to kind of buy. I mean, that's the way we are approaching it. And that's the best way to do it right now, so that you are at least shorn of all assumptions in the market right now.
So are there large swaths of such opportunities available, or are they very, very niche? And part two of my question then is that even if you're spotting these, are you staggering out your purchases because the markets may not go up in a hurry, or are you comfortable putting large dollops to work immediately?
Well, so from the perspective of opportunities, I think the net is getting wider, and day by day, and we are seeing many more companies fall into the value net. So that universe is clearly rising. We have seen it in our own internal investment universe that we track, where incrementally a good number of companies are coming into a reasonably decent valuation fold. But having said that, we are the one thing that we are, at least as of now, not dismissing, and we've never kind of let our eyes go off, that is that we don't really want to buy into anything which has got balance sheet fragility. We are willing to kind of bet on companies where we think that the operational challenges probably will continue for a while longer, or may disappoint us for a longer period of time. But we don't really want to kind of venture out into any company which has balance sheet risk. So from that perspective, today we still, given the fact that we are managing fiduciary money, and to that extent, we are still continue to remain in a heightened sense of alert.
Mm-hmm. Okay.
And to answer your question in terms of whether we are doing it at one go, or we're doing it piecemeal, I think it makes sense to do piecemeal. I mean, we are not hurrying into anything, but we are at the same time not sitting idle thinking that the market can fall further and let's accumulate cash, and that's not how we are approaching things. We are happy to go and buy things where we see value.
Okay. So where would you stack financials in the list of value generators right now?
So it's strewn across. I mean, we have a few of the banks which look interesting to us, some of the larger ones as well, and some even in the small private sector banks, small finance banks, etc. So a couple of the NBFCs has now kind of turned value as well from our perspective, especially the ones who have kind of been able to get money in the recent past, grow in the recent past, especially after the IL&FS crisis. So they've kind of deviated from the overall pack. That is where we are happy to buy into anything which now looks a lot more comfortable from a valuation perspective. And once again, as I said, without making any taking any assumptions on growth at this stage. So I think there are a good number of pockets on the BFSI space which look interesting.
Okay, Tahir, this whole argument that I hear, and because you guys have this particular fund which a lot of people are interested in investing in, that small cap fund. Now my question is this a good time to accumulate small caps, or are you market cap agnostic right now? Typically, I believe people wouldn't be market cap agnostic. A lot of people say that when the bounce happens, the larger companies tend to bounce back fastest, and then the smaller companies, etc., etc. In your own wisdom, would you adhere to that, or are you market cap agnostic right now?
So at one level, we are market cap agnostic, we are sector agnostic as well. But having said that, I mean, like as I said, we are governed by where we see additional value and where we can live with low growth assumptions or zero growth assumptions for a while, and that those kind of opportunities seem to be emerging more in the mid and small cap space, simply because of the fact that valuations have kind of corrected so steeply in a very short period of time. What was, as you know, 30-40% premium to large caps is now converted into a 25-30% discount to in many cases. So I mean, it's obvious, it is staring at your face that if you have a couple of years perspective, then I think it makes a lot of sense to buy into those. How should be your buying pattern? Should you be nibbling? Should you be doing it gradually, piecemeal? That's left to each individual's choices. But as a funder, we are governed by the mandate. So if there is opportunity in small cap, we are willing to buy small caps for our small cap fund, and similarly for our large caps for that matter. So at one level, you can call us agnostic.
My final question, Tahir, and that's on autos, because that traverses the whole universe. Large cap, mid cap, small cap, again a space which is corrected viciously. Ancillaries have corrected viciously as well. Are you of the belief that there is a bounce that can come in, and therefore, if indeed so, are these valuations where you would be comfortable parking money in?
So we've been assessing this space almost on a daily basis, and I think we've come to a stage where it's not that the whole sector is value. There are a few pockets where if you were to probably suspend growth assumptions for a while, then it's not really cheap enough. They're getting there, but they still have some distance to travel. But there are a few pockets at the same time which are kind of turning value. They offer some dividend yield as well, and they are at averages. They are at multiples which are at long-term averages or even a shade below them. So I think it's different strokes within the sector itself. From the perspective of growth, like as I said, overall I would like to be a lot more cautious in terms of making any aggressive growth assumptions. But in the absence of any great policy support, or it'll be left to market forces. It will have to come to a situation where manufacturers, OEMs are able to clear inventory gradually, either by offering some good discounts, etc., or for consumer sentiment to gradually improve, and that will lead to inventory levels coming to a point where eventually we start seeing growth. So I think in that situation, if it is left to market forces of demand supply, it is going to take a while longer than one would ideally expect. Let's see how it goes. We would like to see some interest rates percolating down in the system. If that were to happen, given that oil prices, etc., are favorable, I think we should see faster resumption of consumer sentiment. And if that were to happen, then we would be back to growth a little quicker than we expect today.
Okay, got that. Tahir, it was a pleasure chatting with you this morning. Thank you so very much for joining in.
Thanks very much. Pleasure.
All right, on to the news at hand. Then Indigo promoter Rakesh Gangwal has shot off a new letter to the board. He says he cannot vote in favor of the changes proposed in the Articles of Association till some of the terms and conditions discussed among the board members are implemented. Sajit Mangat is here to take us through the details. Sajit, what are the reservations here that Gangwal has?
Rakesh Gangwal is primarily saying that on July 20th board meeting they agreed on two things. One was to expand the board to bring in a woman director, and the second one was on the RPT, which is a related party transaction. They had broadly agreed on the language of the related party transaction, and they've also agreed on the fact that when the board gets expanded from 6 to 10, there will be two additions to the IGE group, which is Rahul Bhatia group. And there will be two independent directors which will be added to. So in total of the total 10, you will have 4 independent directors, 5 from IG group and 1 from the RG group, which is Rakesh Gangwal group, which will be there. Now he is saying that even though this has been agreed upon there hasn't been any resolution or board it hasn't been it hasn't passed the muster of the board. It hasn't been submitted to the board and board approved it. The language, everything has been done, and because it has not been done, it is difficult for him to support this resolution, which is amending the article of association of the company. Remember, Rakesh Gangwal has nearly 37% stake in the company, so it's a sizable stake to block any resolution. And this is a special resolution which is coming up for Indigo in the next couple of weeks, and so. It's basically an attempt by Rakesh Gangwal to put forth that yes, we agreed on certain terms, but it's not that it was mediated upon. There's a lot of unresolved issues which are there. The articles issue is still a big loophole. So what is the loophole he's talking about? He's talking about two things. One, when you increase the board size from 10 to 10, from 6 to 10, and you have 5 members of the IG group, and you have only 4 independent directors, there are always chances that that the board seat for the independent director may get vacant at some point in time. At that point in time, there will always be a loophole of the board having a larger concentration of IG group. And that's a loophole which he's trying to plug. He's saying that you need to sequence it in such a way that the appointment of independent directors supersedes or comes before the appointment of the independent directors or nominee directors of the IG group. And that thing has not been addressed as of now. In fact, he's putting the entire onus now on the chairman of the board, which is Mr. Damodaran, and he's saying basically that while Damodaran has said that sequencing is something which we should not be going to the shareholders, he's saying that he does not agree to it, and it's a loophole which needs to be addressed, or at least you should be informing the shareholders. And he's also taking the quotes from the email of one of the independent directors, Mr. Khanna, where he is saying that this is an incomplete communication which we are sending to the shareholders, and it sends a wrong message which is there. The other part is the language of the related party transaction.
Sure.
Now we understand from Rahul Bhatia's side or IG group that they have in principle agreed to the related party transactions, which include seeking external help on every related party transaction whose value is more than 2 crores. Now, if that happens, the external party will evaluate it, and then it will go to the audit committee, and from there it will go to the board. So, and both the groups have agreed that they will do it through circulation of the resolution and not seek any shareholder approval of it. But the language has been agreed upon, but the board hasn't passed the resolution. So, it's basically, he's saying that he's not trusting the IG group to follow through with this resolution in the board, and so he's saying that you first pass it in the board, tell the shareholders that we have passed these resolutions, and then I will come on board and vote for it.
Okay. Thanks, Ajit, for putting that into perspective. Well, that's the latest on the promoter spat between in the Interglobe Aviation Company. More on that during the course of the day, but need to slip into a quick break. On the other side of the break, we take a look at how telecom companies have performed in the June quarter. Rajiv Sharma of SBI Cap Securities joins us. And then, will Indian metal firms continue to suffer as global tension keep prices subdued? We speak to Paul Bartholomew of S&P Global Platts and Amit Dixit of Edelweiss.